The fastest way to buy Bitcoin in Australia from an exchange you can trust. Bitcoin.com.au.
Blockchain technology, it's clear we are seeing something quite revolutionary that's going to change the world.
I don't need recognition. I'm on a mission. I'm paying dues. I'm in position. I'm staying up. It's getting late. You're doing good. I'm doing great.
It's a huge push to connect the physical world with the blockchain.
It's always a good idea for investors to make the trend the trend.
You're doing good. I'm doing great.
Hello and welcome to Coincast TV. I'm Kmar Johnson. On tonight's show, Ethereum and Ripple battle it out for the top 5. We look at who's got the biggest coin and what it all means, why traditional investors are dipping their toes into crypto, and don't know you're hodling from your mooning. We'll translate the weird things crypto people say. But first, the week in blockchain with Tessa Dempster.
The big news this week was Ethereum versus Ripple, with Ripple briefly elbowing out Ethereum for second spot. At one point, Ripple jumped 45% in just 24 hours, momentarily earning itself superstar status in the crypto world. This all had a flow-on effect, with Binance recording its highest trading volume for Bitcoin Cash and Ripple. More on that story in a moment. In other news, the Australian financial watchdog has issued a warning to misleading ICOs and crypto asset funds targeted at retail investors. ASIC said it's put a stop to 5 ICOs from raising capital since April because of questionable investor protection measures. And in a major change to America's biggest crypto brokerage, Coinbase has announced a new policy for adding assets. The new policy allows developers to fill out a form for adding new tokens to be listed to help speed up the process. In other news, hardware wallet Trezor has added the ability to buy and trade cryptocurrencies. Users can now swap up to 11 digital assets without the possibility of compromising funds by leaving them on the exchange. Over in the Big Apple, 3 crypto exchanges have found themselves in the New York Attorney General's doghouse this week. In a statement, the Attorney General accused Binance, Gate and Kraken of possibly operating unlawfully in New York and said she dobbed them in to the New York State Department of Financial Services. In a pretty hilarious tweet, Kraken CEO Jesse Powell pointed out the exchange doesn't actually operate in New York. That's a bit awkward. Back to you, Kmar.
If you have any interest in crypto, you've probably heard about the top 5 tussle between Ethereum and Ripple that's had us reaching for the popcorn this week. A massive price spike catapulted Ripple into the market cap's second spot, which is usually held tightly by Ethereum.
It's been a tough few weeks for Ethereum.
It's been a massive amount of growth, a massive amount of interest, but they're all being built on the same platform, Ethereum.
Usually a second in the top 5 market cap, it slumped to third place a few days ago after an astonishing price spike from Ripple. So what's causing Ethereum's blockchain blockage?
Ethereum is like a highway, and all of these dApps are cars on the highway.
And Luke Lombay of PlayUp Limited says there are too many cars on that highway.
Ethereum can't keep up. The highway doesn't have enough lanes for all these cars, all these dApps to be driving on it.
He likens it to the dot-com era of the late 90s.
Too many companies popped up with high valuations on big multiples with no real products.
And just like the dot-com era, Luke Lombay believes the market needs a shakedown.
The institutional money has been starting to shift out of the dApps and the ICOs because, frankly, there are too many of them.
He points to Ethereum's transaction limitations. The platform can only process up to 15 transactions per second. Rival Ripple is 100 times faster, which might help explain its price spike, but both are dwarfed by conventional platform Visa, which processes up to 24,000 transactions per second. And its traditional companies, Luke says, will emerge as players in the blockchain market once the dust settles. He calls them reverse ICOs.
Big established brands, well known, mums and dads out there, even grandparents would know some of these big brands like your Walmart, like Amazon, Apple.
Martin McGinty of Blockbox agrees.
One of the things that we're interested in at the moment is where blockchain's added to an already operational and effective business.
The experts say the eradication of fraudulent ICOs will also help rationalise the crypto market, pointing to one scam in Asia where
What they did was that investors that had invested one day got onto their website and there was just one word on there, and it was penis. And the company had disappeared.
and investors didn't find that one very funny.
You may have heard about crypto mining, but what does it actually mean? We dove into the subject with one of Bitcoin's biggest mining pools.
In the world of cryptocurrencies, everything operates a little differently, and the mining of coins is no exception.
Ultimately, it is the search for new Bitcoins, all right? There's a limited amount of Bitcoins, 21 million, and every 10 minutes, new Bitcoin is found.
That's a lot of Bitcoins to dig up, but mining for coins isn't a pick and axe job.
Through these computer machines called miners, which are basically these very specialized computers, and all they do is they try to solve a puzzle.
The act of mining is essentially using math to solve for cryptographic hash or unique signature to identify new blocks. The mining pool and wallet supplier is backed by crypto mining hardware giant Bitmain.
Bitmain creates these supercomputers. We actually sell them. They're called ant miners. And once you buy one of these, you just literally connect it to the electricity, connect it to a pool. It takes a few lines of code, and you're in. That's it. That's how simple it is. All you have to do is just connect it.
But what's the difference between a miner and a mining pool?
Miners connect to our mining pool so as to get more Bitcoins. Their chances of finding a Bitcoin or mining a Bitcoin improves if they're in a mining pool.
With less than 4 million Bitcoin left in existence, it's getting tougher out there to find coins. Bitcoin mining revenue has increased from $200,000 US in 2010 to a multi-billion-dollar industry.
According to how much computers you have connected to our mining pool, you get that percentage in Bitcoin. So 20% of your miners are connected to our pool, then you get 20% of the reward.
Bitmain's two mining pools, Antpool and BTC.com, collectively control nearly 40% of the world's Bitcoin mining power. The more power you put in, the more profit you get out.
Now let's take a look at the top cryptocurrencies of the week, brought to you by Caleb and Brown.
Bitcoin didn't show many price movements this week, despite the SEC's delay to yet another decision to the Bitcoin exchange-traded fund. This is the second delay to the proposed Bitcoin ETF, filed by options exchange CBOE in June, along with money management firm VanEck and crypto startup SolidX. The new deadline for the decision is December 29th. Short volume from traders betting against Bitcoin has fallen 20% since the announcement, so the market sentiment seems to be feeling more positive. Major catalysts aside, we see potential for a slow recovery in the fourth quarter, with the next major milestone being at $7,400 US. Now to MakerDAO, a platform that generates stablecoins made secure through smart contracts. In a $15 million deal, Andreessen Horowitz Venture Fund has bought itself a 6% stake in Maker's total token supply. We're also putting the spotlight on Litecoin this week, which has reached a significant support level of $50 that has been tested multiple times over the past 12 months. We might be nearing the price bottom, so traders looking to re-enter their Litecoin position may start to do so over the coming weeks. And that's it for Caleb and Brown's top cryptocurrencies of the week.
You're doing good, I'm doing great.
Welcome back. Over in Singapore, worlds collided between venture capitalist, crypto and blockchain. One leading private investment platform says traditional investors are starting to take the technology seriously.
Held at one of Singapore's most prestigious locations, more than 800 guests registered to attend the launch of the Emergence Asia Roadshow. Hosted by Wholesale Investor, the event brought together a wide range of industries to talk shop and blockchain.
The theme for the event was where venture, blockchain and crypto unite. We've got nanotech companies, we've also got crypto-based companies, blockchain projects, gaming companies, like a whole mixture of the whole row, and that's really what makes Wholesale Investor work.
And the traditional investors attending the event were looking for any opportunity to diversify.
proof's in the pudding, and these events bring a lot of startups and growth stage companies that are raising capital to grow further. And investors, they're always interested in deal flow. So it's not just the education, it's to be able to get some skin in the game and actually start to participate.
The cryptocurrency market is expected to near $3 billion within the next 5 years. It's no wonder VCs and fund managers are starting to pay attention. Crypto is slowly taking over Wall Street, with big names including Goldman Sachs, Morgan Stanley and JP Morgan dipping their toes into digital assets.
The ICOs space is really evolving, so we are going back to a more traditional way of funding, equity funding, and this is a good event to bring in like the modern world and the traditional world together and see if there's synergies.
We think that education from the classical investors is really important. The first investor we got in Switzerland, they came from the traditional investments.
8 years ago, 2 pizzas were bought using Bitcoin. That urge for Papa John's has turned from $30 into tens of millions. In crypto, it's first in, best served, as early adopters reap the rewards.
Whilst it's small at the moment in comparison to financial markets, you can see that as security tokens come through, as regulations come through, as more market infrastructure comes through, there is just a big opportunity for some of the early players in the space.
The roadshow continues through Hong Kong and Malaysia before the event's final stop in London next week.
Now let's take a look at the charts with our data guy, Data Dan.
A traditional database versus the blockchain. How does it work and just what is it? It's possibly the most vexed question people ask when consulting all sorts of information regarding the blockchain. Well, the answer for this is quite simple. A traditional database is a centralized database and the blockchain is a decentralized database. Okay, Dan, examples please. Okay. A centralised database is similar to going to the library. If you or I want to find a book, we consult the library's catalogue, and the catalogue provides the location of where the book is. This is a centralised database and effectively administered by the librarian. A decentralised database is the blockchain, and records are added on a daily basis by tens of thousands, if not hundreds of thousands of users worldwide. This blockchain effectively sees records added by you and me and any user of blockchain or cryptocurrency technology. This is the key difference between the two. However, the holy grail for any database is scalability performance, and at the moment blockchain still falls short on this measure. Traditional databases are favoured by banks, huge governments and of course defence agencies. The key point here, however, is that blockchain performance is improving. We've seen recently the CSIRO, a research arm of the Australian government, has recently tested a transaction record in the blockchain of 30,000 records per second. Sounds impressive? It still has a fair way to go. In fact, it needs to improve by a quantum of 3 before it starts challenging traditional databases. However, blockchain technology is finding a greater use in databases beyond just digital ledgers. Record keeping will become the new oil in the 21st century.
One of the world's largest providers of online trading is now offering crypto to its clients. It means they can trade digital currencies without having to go through an unfamiliar exchange to buy it. And unsurprisingly, the company's youngest traders have been quick to cash in.
They call Chicago the Windy City, and since last December, a change has blown through the city's exchange.
The listing of cryptocurrency contracts on the Chicago exchanges has changed the world for financial markets traders.
CMC market analyst Michael McCarthy says that's allowed his firm to offer listed crypto products to its clients.
We listed earlier this year and the take-up so far has been very strong.
So just who are these investors?
There are a number of different groups of traders. Our clients range in age from 18 to 80.
But he says the big demand is coming from younger traders, the average age between 25 and 33, starting out in their careers and looking to cash in on their crypto knowledge.
They're very tech savvy, they understand the blockchain technology, and they're looking to turn that into wealth for themselves.
So far, though, the crypto products are a small part of CMC's portfolio.
We currently have around 9,500 global markets on offer. Only 2 of those are cryptocurrencies. But in my view, the blockchain technology is likely to bring about a revolution in a number of areas of financial markets.
That's despite US authorities recently blocking the entry of trading cryptocurrencies in exchange-traded funds or ETFs.
I think it's very likely we will one day see a number of cryptocurrency ETFs. It's just a matter of getting the formula right.
And how's this for a bold view? He believes in the long term, cryptocurrency technology will eventually have to engage with the central banks.
So some way must be found to fit that into the current financial systems rather than trying to tear down the existing structures.
Now that would blow in a change.
Now the projects to watch brought to you by CTIA.
Japanese banking giant SBI Holdings is planning to launch a crypto token for mobile retail payments. Called S-Coin, the company is seeking to make a cashless transaction system in Japan. The trial for the token starts next month. The University of Sydney has finished trials on a new hybrid fork-free blockchain that can clock up to 30,000 transactions per second. Called Red Belly Blockchain, it's described as a community ledger that lies somewhere between public and consortium blockchains. And in a move that's a little left of field, crypto is gaining ground in football. First, a French club announced its own cryptocurrency. Now, a Brazilian club has announced it's going to launch a token sale for a club fundraiser. Its hard cap is set at $20 million US. The token sale is set to launch next week. And that's all for the projects this week. Back to you, Kmart.
Coming up, why traditional investors are giving Bitcoin a go and an A to Z of the crypto language. That's next.
You're doing good, I'm doing great.
After a rocky start, we're beginning to see traditional investors soften their stance on crypto assets. Despite the bear market, here's why blockchain startups are becoming an attractive investment.
I'm joined now by Steve Torso, the Managing Director of Wholesale Investor. And Wholesale Investor connects traditional investors with crypto assets. Steve, are we starting to see this become a trend?
Thanks, Heidi. It's a great question to start. Really, from what we're seeing, so wholesale investors, our background is actually working with traditional corporate finance and venture investors. So for us, we're actually seeing quite a significant trend of them now becoming more and more interested in the space. And there's two parts to it. One, they're obviously looking for investment opportunities, but the second part is they're really just trying to understand what is happening, what is driving it, what are the mechanics which make this, I suppose, the crypto space tick over, and also who are the players and how can they get involved.
So Steve, what's so attractive about blockchain tech companies for traditional investors?
What is fascinating about blockchain to tech startups is in the last, I suppose, 18 months to 2 years, it's really proven two things. One, it has an incredible ability to raise money. Two, the markets actually have liquidity. And what people forget is if you're comparing it to a private company, often these companies have zero liquidity at all. So when you're seeing some of these early stage businesses, these innovative growth companies that are raising significant amounts of money, you're starting to see that not only can it have that ability to raise money, but more importantly for some investors, also they've got potential liquidity or the ability to sell some of their tokens and actually realize some of the profit from their investments that they've made.
We're seeing traditional capital markets concepts beginning to migrate into crypto assets. Do you see this as a positive trend?
Absolutely it is. In fact, the opportunity for security tokens is actually one of the areas that interested me most. And the reason behind that is, as I said, if investors feel that investing into emerging growth companies that they do have a potential in which they can exit or if they can realize profits at an earlier stage, then what that means is that more money will actually flow into innovation.
And lastly, can you explain what's behind some traditional investors now deciding to hold crypto in their portfolio?
From our experience, we've found that more traditional investors are now actually taking the time to come and understand and come and research the space, because with the markets being off their highs, what it means is that the pressure is off and the FOMO has sort of disappeared from the marketplace. So as I said, it gives people more of a chance to understand what is actually happening. The other key components which are taking place is people are actually waiting for regulation. It's a rare time where the industry itself wants actually regulation because they want a framework in which to work under. The other component is that There's now great potential for more infrastructure services which, like the traditional capital markets, are being built and services being offered so that people can understand more about what's happening with different opportunities and make more informed decisions.
Thank you, Steve. That was Steve Torso, the Managing Director of Wholesale Investor. Back to you.
Now let's go to the week ahead with Katie McDonald.
Google is set to revise its crypto ad ban on exchanges advertising in the US and Japan, reversing its March decision. Starting next month, registered crypto exchanges will be allowed to advertise on Google's AdWords platform, targeting the US and Japanese audiences. And crypto-funded web browser Brave has announced it's planning to collaborate with blockchain identity platform Civic. It'll give Brave verified publishers the ability to confirm their identity using Civic's technology. In conference news, Swell kicks off in San Fran on Monday, with former US President Bill Clinton set to be the big-name guest at the Ripple event.
You've probably heard the terms HODL, hard fork and moon being thrown around when people talk about Bitcoin, but do you know what it all means? Here's a little crash course in crypto speak for you.
Crypto. It's not just a currency, it's a language. A is for all-time high, the highest historical price of a specific coin. B is for bag holder, a trader who bought in high and missed their chance to sell. And we all know there's no second chances in crypto. It's also for buy the dip, because when the price is down, you bag the bargain. H is for hard No, I said fork, F-O-R-K. That's when developers make a fundamental change to a blockchain software or protocol. And if they don't see eye to eye, one group might break away to create their own. There's also a soft fork, but nobody cares about that because it's only a minor protocol update. H is for HODL, which first appeared on a crypto forum in 2013. Caught out by a typo, the poster meant to say he was holding, but instead created one of the most famed terms in the crypto dictionary. Not a bad effort for a few too many whiskies. M is for mining, Bitcoin mining, because those coins don't release themselves, you know, and this process requires more than a high school calculator. M is also for moon. That's crypto slang for the extreme movement of a coin that's price is going sky high. P is for pump and dump, a scam where one group inflates the price of a cheap token using that old chestnut, fake news. Once the price goes up, the pumpers get to work selling them off, leaving unsuspecting investors with sweet FA. S is for shill, the act of shamelessly endorsing a coin. Think the Kardashians on social media and you get the drift. W is for whale, a huge player with a huge amount of crypto. Just like Free Willy, they can make a big splash too, causing prices to sink when they sell even a portion of their holdings. And lastly, U is for unicorn, which in crypto speak is a privately held startup that's valued at more than $1 billion. Uber, Airbnb and Pinterest are a few of these mythical creatures. Shh, down girl.
There you go, now we're all fluent in crypto. Thanks for joining us tonight. If you want to know more about any of the stories you've seen, go to coincasttv.com. You can also find us on Apple TV or catch some of our stories on the Wall Street Journal online. Coincast TV is on Sky News Business every Friday at 7:30 p.m. See you next week and keep hodling.